Hi, and welcome again to another edition of Market Analysis for today, March the 2nd, 2023. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, the major equity indices continue to flirt with important support areas, but so far buying has saved the day. Yesterday, the S&P 500 fell to its 200-day average for the second time in 4 days and then bounced albeit only a little. It was the same story for the Nasdaq. The large cap stocks continue to bear the brunt of the selling, and the mid and small indices rose. Trading volume on the major index ETFs has come down quite a bit in recent months as investors try to deal with this market. Of course, there are now other no risk options for market participants. The SPY ETF has dropped to 81 million shares traded from a recent peak in mid November of 99 million. During the early part of the bear market in March 2022, the 40-day average jumped to 133 million. It is typical to see higher volumes during downtrends than during uptrends, as we usually have the panic factor during declines. Now, for the QQQs, the 40-day volume has dropped to 53 million from 67 million for 4 months ago, and 89 million in March of 2022. Now, now, as we said, investors now have relative attractive alternatives, something mostly not available from 2008 until September 2022. But the 1 and 2 year T bills have popped to new highs of 5.06% and 4.89%, respectively. Now, why fight with the stock market when you can get returns like that? Still, it does seem a bit too easy. So, what can we expect today in the markets? We are obviously in a sell-off. All right, markets are poised to open lower. That being said, I have my support at 11,800. That if we continue to move low, most likely we'll be breaking it and trading lower. I assume we could find some support at 11,700, 11,600 for the for the Nasdaq. So the RSI is pretty far away from being oversold, so that could probably happen. So I'll be selling the indices today. As far as for the S&P goes, the RSI is closer to being oversold, so we could probably find that support around 3,900. The Dow is the one that seems to be staying within range. Really, all indices are within range. But the RSI is also pointing lower, getting closer to being oversold. So that could probably be achieved today. Then we have crude oil. Crude oil has opened with a gap up. So that momentum most likely will continue. This gap has been closed by the market. So I can expect some momentum to the upside. RSI is above 50, so it's pointing to a upward momentum. So I would be long crude oil. Nat gas has really been ranging, so I am out of nat gas for right now, and I will assume that nat gas will continue to do the same, staying above the 21 moving average, pointing to that range. Then we have gold. Now, gold yesterday did made a nice move to the upside, almost reached 1850. It retraced. It opened today with a gap down. So that, given that scenario, I am going to be short gold. 1820 is my target, even though I have 1800 as my support. But the RSI is below 50 and pointing towards reaching that oversold territory. So being short gold. Then as far as silver goes, that gap hasn't really been closed, but it's trading lower. So I will be shorting silver. 2050 is my target. Copper really has opened with a really big gap down. The momentum will continue most likely. So at least to the $4 marker, which is a psychological level. Will it continue to trade below that? That could be the case, but I would be shorting a copper today. Then we have Bitcoin, that range that range around the 2350 marker, trading below it, trading around above it, but 24,000 is that resistance is set, and then we have 23,000 as a support. The moving average, 21 period moving average, is really just right there on the market. So that could also act as a dynamic support. As far as the currency goes, the euro did trade it higher yesterday, almost reached 107, but it quickly retraced. It opened with a gap down, so that momentum will most likely will continue. My target is 105.50. As well as for the pound, it will most likely continue to trade lower. 119 is my target because the dollar index has prompted higher. It's already violated my resistance that I have on it. So let's just place this to 105 300 ish around there. Let's see if that will be the case for the dollar index. Remember, as the Fed pulls liquidity out of the stock market, investors flock into the bond market. So the bond market is where the dollar index receives its valuation. So most likely we will reach this uh, this resistance, and so that will bring down the other ones that I have. The metals, the currencies. Crude oil could be a sticky point. Well, those are my levels for today and what I'm doing for today. Hope you have a fantastic trading day. I'll see you tomorrow.